Welcome to Bill Faith Unfiltered, where we give you actionable episodes without the bullshit. Here is your host, Bill Faith.
All right, folks, it's a big day on Bill Faith Unfiltered. We have my good friend Avery Carl joining me today. What's up, Avery?
Hey, how you doing?
I am doing fantastic. So let's jump right in, Avery. You are the queen of short-term rentals. Really, I'd almost want to call you the godfather, the
Well,
godmother, right?
thank you.
I want to talk to you today about two markets specifically. One, Smoky Mountains, and two, kind of the Emerald Coast, 30A. I just had John on, one of your agents that I use in Gulf Shores to talk about that part of the Emerald Coast. But really, I want to focus on like PCB through Destin as well. So let's start right there because you live down in that area. You know that market. You sell more properties than any other broker in the world in short-term rentals. What say you about the Emerald Coast?
Okay, I just bought one, just closed on one in 30A a couple weeks ago. And so this market is very similar to the Smokies or a lot of other true vacation markets. So not like in Nashville, not like in Austin, or even like a Scottsdale. These are markets where nobody lives here. 90% of the real estate that has always been bought and sold has been second homes and vacation rentals since before Airbnb, since before COVID, since before the internet. So these are basically, up until I would say, 2016, 17, when Airbnb kind of like became a thing that we were all using and kind of democratized owning vacation rentals and being able to actually make money off of them instead of handing 40% to a property manager. So these are markets that are they're full of toys. They're not driven by people who actually need to move and to buy new houses because their family's expanding or because they're getting a job here because there's not jobs. So they're basically markets of like boat alternatives. So because of that, in economies like the one we're in right now, you see a lot more inventory than in those markets that are good short-term rental markets like a Scottsdale, but they have other industry outside of tourism. So you've got more the real estate market's kind of turning a little bit better. So these markets are dead in terms of real estate sales, 30A included. Both of these. Well, you asked about Emerald Coast specifically, so
Let's just talk about 30A. You just bought there.
yeah. So it's dead, which means no homes are being bought or sold. Actually, I mean the entire country. Real estate is very market specific, not really nationwide. But if you're looking at data, fewer homes were sold in 2023, 2024, and looking like 2025 too, than the entire last 35 years. So more homes were sold in the Great Recession than in the past few years. So we are seeing inventory.
Hold on a second. Let's let that sink in for everybody. Say that one more time
Yes.
because that's crazy talk to people
Yes.
that are listening.
More real estate transactions were done in 2008, 9, 10, the run down from the Great Recession than the last 3 years.
That is insanity.
Yes, it really is. But it's a really good time to be an investor. So what I did, Luke and I, we weren't planning on necessarily buying anything, but after church one day a few weeks ago, we were like, let's go look at some real estate. And so I started pulling some things up and we're like, let's look at 10 things today on 30A, not even going down to Destin, just, close to home. And we said, we're not looking at anything that has been on the market for less than 9 months. And that was basically it. So we went and looked at 10 properties and everything had been on the market for pretty close to a year. Some of them more like 2 years, because when you look on the MLS, you can see, well, they delisted it with this agent, took a month break, and then went with another agent. So it looks like on Zillow that it had been less time. So some of these have been on the market for 2 years. And then I look at, okay, well, how much equity do these people have? So sometimes you can find the people who like bought in COVID who don't have a lot of room, who are actually willing to sell it to you for less than they paid for it. But what I was actually looking at was for people who have the most equity, because I think that.
How do you find that, Avery, for people out there that don't know how to find that?
So but ask your agent would be the best answer, because like I just said, you can only see so much on Zillow because you're looking at the property history though. If you are on Zillow or Realtor.com, you want to look for what their last sold price was. So if you're looking at a $500,000 property and they bought it for 510, like they're kind of
In
probably in
2020, they also have a
Yeah.
low interest rate, right?
Yeah. So, but if it was delisted for more than 30 days, it won't show the whole history. So ask your agent to go in the MLS, and then you can see like, oh wow, this says it's only been listed for 60 days, but they delisted it for 30 days. It had been on for a year and a half before that with a different agent. So that's how you find the days on market, and then look for what the most recent sales price was. So we offered on 3, very low. 2 people didn't even respond to us, were completely offended, like, get out of my life. And then 1 dealt with us. So
Like, what are those offers? Like, what price range and how much below list did you offer?
so I don't want to piss off anybody's real estate agents if y'all go do this,
Well,
but
I think people are afraid, Avery. Don't you see? I mean, you're the agent, right? I'm even embarrassed sometimes to go in and do a low ball
no,
offer,
just
and I
do
think
it.
it.
Just do it. That's what you have to do right now because sellers are not being reasonable about where they're listing. But if you go in there, I'm talking 300, $400,000 under. So what I was able to get, they started at 1.25, and I wanted to start at 850. Luke wanted to start at 750 because he has to get that extra little jab in. And then I was like, oh my God, this agent is going to kill me. But we got it for 815.
Wow.
Started at 1.275, and that person, it was a fairly new construction neighborhood. Like they were all built after 2015, and they bought it brand new, and I think it paid like 500 for it. So they had the room. It had been on market for a year and a half. They were just finally tired and ready. So you just in all of these markets, you can find the deals, but it's not a one offer, two offer thing, and it's not a, oh, I looked in 30A for 2 weeks and it didn't work. Well, how low did you offer? There's a number at which everything will work. You just have to offer that number,
Can
and
we
people just
unpack? I
won't.
know you're super private and you don't usually talk about this stuff, but can we unpack that a little bit?
Yeah. What do you mean?
Well, so you pay 850 for it. How many bedrooms is it? Like,
815.
what tier is it?
Okay, so it is golf cartable to the beach. Paid 815. It's a 3-bedroom, 3-bath, built in 2017 or 18. It's golf cartable to the beach. You could walk it. I wouldn't. I wouldn't walk it. So I would call it. We don't really have tiers over here because it's kind of back in a neighborhood. I would call it like
Quarter
mm,
of a mile to the
quarter
beach,
of a
half a
mile.
mile?
Yeah, quarter of a mile to the beach. So a little bit of a walk.
Did you and Luke buy that for cash flow? Did you buy it for appreciation? Why did you make that investment?
So the way that we buy is for the total package. So it'll cash flow some, but definitely the appreciation is a factor, but really more so the tax benefits.
So
So
the trifecta, cash flow, appreciation, and tax, you're rolling everything together to look at the value of that investment.
yes, yes. And so this one, I kind of started looking at it like my kids are still super little. My oldest is 6. But looking at, okay, this one property can pay for her private school education and then probably her college. If we just take everything from it and put it in an account, similar one for my son who's 4. And just kind of looking at it that way is like a true, this is in I think people really lost sight of in COVID that these are investments. They're not meant to be like pulling a slot machine and getting rich. And a lot of people kind of treated it like that in the COVID boom. And yeah, it'll cash flow. It's not going to blow anybody's mind in terms of like, oh, I got a 50% cash on cash return. I kind of don't care. At this point in my career, I care. I want there to be cash flow, but I really care about the total package and what is this doing for us for our future and not trying to, quit selling real estate on one short-term rental investment.
Right. I agree with you 100%. I mean, I look at the 4 components: cash flow, appreciation, debt pay down, and tax benefits. And I think, and that's why I wanted to unpack that. You're a high income earner. I'm a high income earner. Tax benefits are really important to us, especially if we go back to 100% accelerated depreciation this year, right? Which I'm very confident that's going to happen. I'm sure you probably feel the same way.
Yeah.
So is 30A 30 I don't believe 30A is a cash flow invest, just like you just said. If you're looking for cash flow, it's probably not the market to invest into, but if you want the tax benefits, you want a lifestyle asset, you want great appreciation, kinda like in Whitefish, Montana, where I've invested $9 million in the last 2.5 years. Most people are not gonna be able to cash flow in those markets, but it's a great investment tax-wise and appreciation-wise. Is that kinda what you and Luke look at this investment?
Yeah, yeah. And I mean, yeah, yeah. I think I'll stop there. Just looking at the total package of what is this doing for us now versus what is this doing for us in the future. Taxes is a big one. And really just, the total package. And if you're looking for more cash flow, I would say probably Panama City Beach. There's some good deals in Destin. But for us, this is like, I also wonder, this is getting a little crazy, like often crazy mom land, but like, are my kids going to be able to afford to buy a house one day? And they're probably not going to want to live right down the road from mom and dad. But if they do, like, we got a couple houses that either they can use them as a job, or if they need to live there, we have those, which hopefully not. I hope they move to New York and chase their dreams or whatever. But, I think about that kind of thing too now when I'm buying houses. Like, what is this
It's
build gonna
super important, and I think nobody talks about that, right? So if you do have kids, I mean, you bought an $815,000 home. Your oldest is 6, right? So, I mean, probably buying a house in 20 years maybe after college. What's that $815,000 home in 30A gonna be worth? 2,000,000, 3,000,000 at that point?
We don't it tends to trend upward is all we know?
How does a 25-year-old spend $2,000,000 on a first home? I don't know. I worry about those things as well.
Yeah.
So you mentioned PCB, 30A, Destin. I think a lot of people bundle those all together and think they're the same market. I view
Right.
them completely different markets. If I come to you and I say, Avery, I make $250,000 a year. I'm at 20% DT. I've got $200,000 to invest. How do you direct me to go to one of those 3 markets? Because they're not all the same, right?
Right, right. So I guess I would ask you what your goals are. Like, do you like most of the people that buy with us on 30A just grew up coming here. They want a little cash flow, they want the tax benefits, but they just really want to be on 30A. And some people come to us and they're like, "Hey, I just want a beach property. I just want it to cash flow. I have a few other criteria, but I'm location agnostic." Then I'd probably go to Destin or Panama City Beach, depending on what's available at the time. Panama City Beach is overall cheaper than Destin. Destin, though, is a little bit higher end of a guest. So we'd probably look in both of those places and just figure out. But it also comes down to the investor's personal preference, because I really, really encourage all of our clients, like, yeah, you can do this completely remote, but you really need to come down here and drive around and understand the market, because some people will come down here and say, "Oh my gosh, I love this area. This is where I want to be." And some people will, they just really don't care. But it does matter. You do have to come understand your market, understand it as a tourist and what they're coming to do, where the location is, proximity to the things they want to do. So it does come down to, people say, "Oh, you can't have personal preference in it," but it does
You
100%.
have to, don't you? I mean, look, I've been invested into Gulf Shores for a decade and I never go down there. I come to 38 to vacation, right? I make my money there and then come over there. I just bought, a shitty little 2-bedroom condo in Panama City Beach, and I will probably not even see it for the next year. We'll renovate it, we'll rent it. And if I do fly down there, I'm going to go stay in Seaside or something and go have lunch with you at the Shunt Gully and, eat at nice restaurants.
Yes.
So, kind of, how would you grade right now from an investability standpoint, PCB, 30A, and Destin?
You know, you're not going to like this answer. To me, any market is investable. It all is the same level of investable. It just depends on the deals that are available in that market at the time.
I
It
love the answer. I agree with you 1,000%.
Yeah, so I don't really, when people are like, "Well, what's the best market?" And I'm like, "Well, the best market is the one that's best for you, the one that you can afford, that you have the competitive edge of knowledge in that market." And other than that, I mean, any market in the world to me, has the same level of availability. I mean, of investability. It just depends on what deals you can get at the time.
I agree with you 1,000%. I mean, I just spent 400 and $395,000 on a 2-bedroom condo that, we're transacting for 550, a couple of years ago. I mean, and I know what's going on with the building. I think you know what building I'm in. It's a rundown building, but, you know, John's running it now and things are a little bit
Cool.
different. You get that inside information. It's almost like insider trading, right? So let's divert to the Smokies, right? And let's talk about that. Unpack that in the same fashion for me. What do you think about what's going on in the Smokies? What I hear, and I'm not the expert there because I've never bought there, is that like the 1 bedrooms, like 1 bedroom pool houses, right? Or the condos are performing as well as 2 and 3 bedrooms there. Do you see that same thing or is that a myth?
I've always loved one bedrooms and studios in the Smokies. I have a few of them. Condos, absolutely not. Avoid at all costs. They don't. People don't rent those. They will, but it'll be the last thing to rent. I've always loved my studio and my one bedrooms in the Smokies because they rent no matter what, and their occupancy rate is very high. So I've got a studio that we paid 125,000 for. I put $12,500 down, and that thing makes 70,000 a year grosses. And my mortgage on that is like $750 because it was
That's crazy.
yeah.
And where is that? I mean, so are you like pro Dollywood, pro Gatlinburg, Sevierville, Pigeon Forge? Stay away from Wares Valley, like people talk about on social media. Kind of what's the play there?
People who are not doing well in anywhere in the Smokies, I mean, let me put it this way. When you go to the Smokies as a tourist, you are going to go to Pigeon Forge because that's where Dollywood is. You're going to go to Wares Valley because that's where Cades Cove is, which is the most visited place in the entire national park. And you're going to go to Gatlinburg because that's where also one of the main entrances to the park is. And you can do the Gatlinburg, all the Ripley's, believe it or not, the aquarium, there's all those things down there. So no matter where you stay, you are going to each one of those places. So for me, I like to buy where the deal is. I own several in Wares Valley. I own several like in the Bluff Mountain area, which I would say is closest to Pigeon Forge, and then also Gatlinburg. And they perform very, very similarly. So it really, again, to me, just depends on the deal. I wouldn't buy something close to Dollywood just because it's close to Dollywood. Like you don't really want to hang your hat on any one thing. But that's what I like about the Smokies is it is kind of a wide area, and there's not a central like downtown where all the attractions are. They're all spread out. So no matter where you are, you will catch some of that. I really love Wares Valley. I love our Wares Valley properties. It's kind of up and coming. Like it's a little more of like the hipster area of the Smokies. But, it really does come down to management. And I think that, there's 1,900 active listings in the Smokies right now. So that's a lot. That's more than pre-COVID. That's more than when I started selling in the Smokies in 2016. And so again, you're looking at this is not a market where there's a lot of primary homeowners driving that transaction count. So it's essentially a market full of boats, of vacation homes or second homes. So I've been under contract on a couple of places in the Smokies this year. One bedrooms typically ended up falling out of contract for weird things like drainage situations and things. But I'm a big fan of one beds in the Smokies. They always do well. And I think where things kind of got saturated in the Smokies is that people out from outside, people who didn't grow up there, saw this hole in the market of, okay, there's no luxury properties in the Smokies, and they kind of overfilled that. And there was also not a lot of high occupancy. Like you didn't see 6-bedroom properties in the Smokies when I first started selling. It was all 1, 2, 3, maybe 4 bedrooms. And that kind of got overfilled. That hole got overfilled. And the reason I think is because people they got too focused on the hole and lost sight of who comes to the Smokies and why. It's a blue collar destination. Like this is not Aspen.
A lot of blue collar single families, like with 1 or 2 kids, right?
Yeah. Yeah. So there was a need for a few high occupancy, luxury cabins. But what's happened is building that many luxury properties and like high occupancy properties, and then pushing that price per night up so high to cover how much it costs to buy something and amenitize something like that, that the average renter there can't afford to go. So to me, I like actually not just in the Smokies, but everywhere I invest, I like the Target level properties. So not Walmart, not Bloomingdale's, Target. It's got a little bit of class, it's cute, clean, and comfortable, but not crazy because that stays rented all the time. Now, all my properties are nice and updated, but I don't have any hyper amenitized anything crazy because in a recession, those Bloomingdale's people will still go to Target. But when the economy is good, those Walmart people will bump up and start shopping at Target too. So I like to I don't want to call it middle of the road because that's typically not good. But, a little bit, we got some class, but, we're not up here going nuts.
That's a great analogy because I kind of go on the bottom and then to the very top, and I'm not in the middle, right? And you're 100% correct, specifically on the occupancy side. I mean, I just did an analysis of my big super properties, and I'm under 60% occupancy as a portfolio year to date. I'm pushing 57% on the big ones. So if you can't command top dollar, it's going to be very, very challenging. I agree with you 100%. So you're pretty big on like the one bedroom still today. Any specific locations there? Just like you said, just try to be close to Pigeon Forge, close to Gatlinburg, or proximity in between.
Yeah, I call it the triangle. So you've got Sevierville, the dot for the Sevierville city at the top, and then you've got Wares Valley over here, and then you've got Gatlinburg over here. Kind of anywhere right sort of in that triangle typically will be a good enough location. Now, of course, you have to look at the property itself and does it have a view and things like that. But I mean, it's the going is good if you're a buyer. Do not sell your property right now. There are too many in any market. If you are a short-term rental investor, now is not a good time to sell. And if an agent tells you it is, they're lying to you. It's a really good time to be a buyer because you can run around and make low offers to all 1,900 of those properties, and eventually somebody's going to be ready to sell. And I think it's kind of become apparent that the properties that are listed right now, like people know the real estate market's in the toilet. Like they know this by now. It's been 2 or 3 years. So the people who are selling are not want to sellers. Like, let's see how much I can get. These are people who are not happy. Who
There's
are telling-
pain.
Yeah, yeah. There is pain in the market. So and I see all these memes of like, I wish I wouldn't have been in first grade in 2008. I should have been buying real estate. And I feel like we're kind of in a time similar to that right now, that it's a terrible time to sell, but if you're a buyer who's willing to put in the work, you can get some good deals right now.
So you just closed on one in 30A. How big of a buyer is Avery through the end of the year?
So that one was a bit of a gamble on the 100% bonus depreciation coming back because we're not totally sure yet. I feel really good about it. I will probably see I think we're pretty close to finding out. I will probably buy 2 more things by the end of the year if I had to guess. I bought one in October, about one in March April, 3 weeks ago, whatever that was. I'll probably buy two more by the end of the year. It's short term.
You almost have to
Yeah.
when you're a high income earner just to offset taxes, right? And a lot of people talk about don't let the tax tail wag the investment dog, but for a lot of people, you almost have to have that be equivalent to cash flow or appreciation.
Yeah. And I think that, again, it got so hyped up during COVID that people were quitting their jobs on 1, 2, 3 properties. But like, it's called real estate investing. It's an investment for your future. And it shouldn't be like trying to strike gold situation. So yeah, we want that cash flow. Everybody wants cash flow, but there's a lot of other important things that are involved in it too. So it doesn't have to be, you can choose the tax benefits or you can choose cash flow. You can do both of those things. Now, is it going to be like a 40% cash on cash return? No, but you are still totally able to build a good fortress around your income of investment properties. And another thing that I've seen a lot of people doing is if they had a worse year last year than they did the year before, they automatically want to sell. I'm like, wait a minute. There's no reason, because you're still doing fine. The market is not like short-term. Your short-term rental is never going to make $0 unless you mismanage it. It's the stock market goes up and down. People, you shouldn't be pulling your money out of that just because it went down for a week. Same thing with short-term rentals. Like it doesn't matter. You can own a property for 50 years. You're still only going to have one best year ever. So if we're running off and selling things because we made less money this year than last year, you're going to end up selling everything you have because at some point, everything is going to have not its best year ever. So just hang on. Just don't sell anything. It's a terrible time to sell. It's actually, we have a joke at the short-term shop. You always want to be the second or third listing agent the past few years because the people list with the first listing agent. It won't sell. They're like, well, let me just see if I can get this price. It doesn't sell. And they're like, well, you didn't list it hard enough. And then they go to the next one and it doesn't sell with them. And then when they get to the third one, they're like, okay, maybe it is the price. And then they let that one lower it and then it sells. So it's not a good time to sell. Don't sell your property if you don't have to. Wait. Rates only need to get down to like 6.25, in my opinion. When rates go down, the buyers will flood the market again. I'm not looking for 3%, not even looking for 5%, but like 6.25 is, I think, where a lot of people will start jumping back in, because the difference between this time and 2008 is 2008 people had no equity. They didn't have a choice. They couldn't jump back in. This time people are choosing not to buy things because of the rates. So I think when we get to that 6.25 number, properties are going to start selling. We're going to start seeing a lot of buyers come back.
Nobody can predict, but I'm going to ask you, when do you think we'll see that?
Oh, it's hard to say. So
You think we'll see that in the next 12 months?
I would have said no, but President Trump, and I would never talk about politics. I don't care about politics. I think Ozzy Osbourne should be the president of the United States. So, but we have to talk about it because it affects real estate. I do feel like he is purposely, and I'm not a politician, so y'all don't like, I don't know anything. I just know about real estate. I do think
You know, this segment's going to go into a reel and me and you are going to get hated on, right?
what my just small town Mississippi girl real estate investor perspective is he's trying to cause a recession. He wants a weaker dollar. He wants a lot of these things to lower rates, to cause economic uncertainty so that the 10-year yield will go down, so that rates will go down, because the federal government has a lot of debt that they have to refinance here in the next year or two, which we will catch that trickle down effect from in mortgage rates. So if we hadn't done all this tariff stuff and all these things in the past month or two, I would have said probably not till next year. But like he is actively trying to like knock some things down, which, you know, whether you agree with it or not, like I'll take lower interest rates, you know.
If you look at his first term in 2016 and you look at the stock market, you look at the treasury rates, it's almost identical of what he did in 2016 without the sans tariffs. I agree with you 1,000%. Once again, I'm kind of like Avery. I'm right down the middle. I could give a shit about, you know, politics or Republican or Democrat, but I'm hoping within the next 9 to 16 months, the next year, we'll see that happen. You know, who knows? But I think that the people that are going to miss out are the ones that are going to wait.
Yeah, until we see that, it's a great time to go out and get some deals if you're willing to put the work in.
I agree. And I think it's probably the best time that I've seen in my entire career to be able to buy, to be honest with you. I'm a buyer. Sounds like you're a buyer. You're looking for a couple more as well. Where's Avery looking next outside of 30A? Are you looking for those one bedrooms in the Smokies?
Yeah, looking at one bedrooms in the Smokies. Luke has put a leash on me about where we can buy because he doesn't want to have to set up a new. I'm really want something in the Texas Hill Country, but he's like, I do not want to set up another set of vendors and all these things that, you know, I don't want to set up a new system somewhere that we're not.
That's
So,
stressful.
yeah.
That's the hardest part.
Yeah. Yeah. So probably Smokies or maybe 30A or Destin.
Wyoming?
He would love to get something in Wyoming. I would love to get something in Wyoming. I don't know that the prices there make a lot of sense in terms of and versus the tour. Like the only place that I can really find that gets the level of tourism that I would like to see is Jackson Hole, and that's like way outside the budget of what I would ever want.
Nobody can afford there. I mean, you got to be a hedge fund manager
Yeah.
to afford Jackson Hole.
Yeah.
I looked in Jackson Hole, Avery, and I saw something the other day, 1.2 million. I'm like, holy shit, I could afford that. And then, it's a 1/6, fraction
Yeah.
of like a $9 million property. I'm like, that's out.
Yep. I've done that before too. I've been like, oh, cool. For an eighth of the time.
Exactly. Awesome. Avery, thank you very much for jumping on and giving us those updates and especially a look into what you're investing into. It's really exciting. I think I need to have you start looking for a one bedroom with a pool for me in the Smokies.
We can do it. We can do it. I just, it really is. It doesn't have to be, a short-term shop market, but I really do think vacation market specifically, because like we've talked about, there's not a lot of transactions going on because there's no industry outside of tourism. These are a bunch of second homes, vacation homes, toys, so much inventory, like really good time to, I don't want to say like shooting fish in a barrel. I feel like you probably shouldn't say that anymore, but it feels like something you shouldn't say, but it is a really good time in those types of markets to just go down the line and make low offers. You will find somebody who's willing to deal with you and you can get some good deals.
I agree with you 1,000%. All right. Before we wrap up, the most important question
Oh, Lord.
of the entire podcast, I'm going to put you on the spot. Are you ready?
Mm-hmm.
What is on Avery's concert tour list for the summer?
I'm so glad you asked. So, what do we have? Taking the kids to Jazz Fest in New Orleans next week. We're gonna knock.
Damn it. I wish I had the hotel ready. It's under construction.
Well, I can still go look at it. We've got a condo there. So I can still go drive by it. So we're doing that. Who's playing that weekend? We've got Joan Jett, which I'm very excited about taking my daughter to. I have a Joan Jett
I've
tattoo.
never seen her.
Oh man, I've seen her 1,000 times. So good, so good. And Pearl Jam's headlining. That's really more of a Luke thing. I don't love the whole once rock and roll got real serious and we're talking about
Yeah.
serious subjects. Kind of
I'm
out
not
the
a big
water.
Pearl Jam fan. I was a Soundgarden guy for that grunge
Oh
area.
yeah, yeah.
But here I got to share this with you. So I'm a big GNR fan, right? And my wife and I guess it was 2 years ago, they were here in Nashville. We went and saw them at Geodis, and Carrie Underwood opened for them.
Oh,
Did not sing one of her own songs, not one. It was all 80s rock, and she literally cranked out 2 or 3 Joan Jetts that were
oh,
unbelievable.
I'll have to check
You
that
should
out.
look that up on like YouTube or something because she was spot on. Amazing Joan Jett.
Oh, I'll check it out. Well, we're gonna see the real Joan Jett, Pearl Jam. Then we got AC/DC in a few weeks in Tampa, which will be my kid's second time. There are no 6 and 4-year-olds in the world who've seen AC/DC twice. And mine have seen Judas Priest twice. We're seeing him a third time with Alice Cooper in the fall. What else? Oh, Billy Joel and Stevie Nicks, the Superdome in October. We got a whole we have a whole spreadsheet of the kids' resume of shows we've seen. We took them to see Paul Simon last week, and my 6-year-old said, "This is the worst thing I have ever seen in my life."
I hate to admit this, being a headbanger growing up, Motorhead, Metallica, GNR, all that type of stuff, Iron Maiden, and I've never seen AC/DC.
Oh, well, they're on tour. You
I
got
did not know that. So now you know what I'm doing. As soon as we're done, I'm pulling up the tour dates and gonna find a spot.
Yeah, they're probably coming. I would assume they're coming to Nashville. They're going to be in the Southeast pretty soon because we're seeing them this May 16th in Tampa, which I hate going to Tampa, but it's the closest one.
It'll be so hot down there.
It's hot. It's really hard to get in and out of that Raymond James Stadium, but it has to be done in the name of
Well,
rock.
if you need a car service or something, let me know. I'll hook you up. It makes it a lot easier. They'll just be waiting for you.
Might take you up on that.
Awesome. Well, thank you, Avery. I appreciate it. You are a wealth of knowledge as always. Amazing having you back on the pod. And, I'm serious. If you find a 1-bedroom that you're not going to buy, hit me up. Let me know.
All right, I'll send you one. I got one in mind right now.
Awesome. Cool. Thank you. Have a great day. And maybe I'll see you in Tampa at AC/DC.
Yeah, maybe.
Thanks for joining us, everybody. Happy hosting. We'll see you on the next episode of Bill Faith Unfiltered.